details here, Ryan.
The state of the industry in January was very tenuous, and to a large extent, but specifically the shale industry we're talking about. To a large extent, that's because the general business model of shale E&P companies is reliant on all the other oil producing countries in the world, effectively, the members of the OPEC Plus agreement, to restrict their own production in order to prop up the oil price high enough for shale wells in the U.S. to be profitable.
The reason why we are not seeing mergers and acquisitions, and we did not see it in 2019, and we are not seeing much now, is because of the valuation. And we have serious issues with valuation. If think about it. Whiting went through bankruptcy and refused to offer itself for sale about a year and a half ago?
Yeah, I would build on what Ellen said, and I would specifically say, going into this year, I personally was positioned long oil, and I was really excited in the way that you can be excited about an assassination via missile when General Soleimani was assassinated January 3rd.
The writings were on the wall all over 2019. Just look at the private equity distributions. We would have ended up with negative prices no matter what. Even without the Russian, Saudi, in a sense, they just expedited the fall.
And Saudi Arabia didn't have to do that. That was a conscious decision to do that. And I think that legacy will live in the market for a long time, because now everyone knows that if Saudi Arabia threatens this, they will go through with it.
But every day we see more bankruptcies. I expect that the actual pain of the bankruptcies will occur in November. PPP will be exhausted. Unemployment rate will actually be the unemployment rate, not this fake 8.6%. Businesses who've been barely keeping open, like restaurants, will actually have to close.
When companies asked President Obama to allow or to lift the ban on exports, they were talking about competition and how they are going to compete with the world, and we need free markets. The same people who were talking about free markets, they went to the Texas Railroad Commission to ask them for mandating pro-rationing. They went to Oklahoma, they went to North Dakota, the same people. That's not a good thing to do and not a good way. You have to be consistent. And if you are talking about free markets for 40 or 50 years and you've been in this business, and then you go and ask a state agency to help you out, this is a major disaster.
Oh, yeah. I think that the biggest thing that matters right now is demand. And I think that demand is going to depend. I think that over the summer, we were kind of hiding from a lot of the problems, that the underlying structural economic problems that we're seeing. We're not yet feeling the full effects of this recession, because you're talking, big companies have only just started to lay people off, and we're going to be seeing that for a while. I think there was perhaps an opportunity to allay some of this if we kind of conquered what I call the fear factor that has been in place, that people have been made to be so scared of COVID-19 that we need to actively combat this fear so that people will feel comfortable going out and existing in the world and being part of the world. And we're not going to see a true recovery until we get past that fear.
I think Chevron's overvalued by 100%.
What it's going to take is for companies to become profitable. Profitable in the real world, and not in a world where 23 OPEC plus countries are shutting in their own production so that they can go drill their new wells. Okay. That's not really being profitable, because that deal's going to fall apart again in the next year or 2 years. And we're going to go through this all over again. And the industry cannot continue going through this every 2 or 3 years, because at some point, kids coming out of college will just refuse to go to work in the oil and gas business. So investors will come back when profits come back, and true, real profitability comes back.
China, we should look at China as our customer. We want to sell them oil, natural gas, oil products. Mm-hmm. And, if you look, China wants to sell us all sorts of, China's looking at us as a customer too. They want to sell us all sorts of everything. They want to sell us cheap plastic toys. crappy iPads, knockoff iPads, crappy knockoff drugs. They want to sell us everything, and we should want to sell them things too, especially oil, because they need a lot of it. And as Ryan said, it looks like their demand is really only going to increase. I know there's a lot of talk of, oh, well, they're going to make electric vehicles only in Beijing or whatnot. China is not just Beijing.
So what you need to do is you need to take frac fleets and drilling rigs and blowtorch them all.